What's going on, everybody? Welcome to tradingrate.com. I hope you guys are doing well. What is going on in the stock market? So today we had a very volatile day in the market. We had so at pre-market last night. So starting from it last night, we had a very good earnings from Nvda that reversed the sell-off in the market. So everybody thought that, okay, now the market has turned the corner. It was going to now reverse. And guess what? What happened was, buy the rumor, sell the news. It caused the market to sell off significantly because Nvda reversed all of its gains and then sold off, caused the entire market to sell off. So what were the reasons why the market sold off? So let's address this, right? Why did the market sell off today? Is it because of Nvidia's earnings? Is it because of something else? It's not because of Nvidia's earnings. Nvidia's earnings was good, and it caused the market to rally significantly, right? So everybody thought, all the bulls thought that they were going to ride the market up to the next level after it got reclaimed the 50 SMA. So let's see the reason why. What was the reason why? So the main reason why the market sold off today was that Fed Governor Lisa Cook, at around 11 a.m. Eastern, she said that I'll just show you guys what went on there around that time. One of the reasons why, what she said was that in her speech, she mentioned that stocks, housing, corporate bonds, leveraged loan valuations were too high. And she said that this increases the risk of sharp market declines. Liquidity risks are rising as hedge funds take on a bigger role in treasury markets. So AI cloud stabilize or destabilizes the market. So she was saying that AI could stabilize or destabilize the market. And he said that the Fed is watching this closely. She did not talk about anything about interest rate cuts, which was the main thing that the market was looking to hear. She didn't talk about that. So she went straight and started talking about high valuations in the market, liquidity risks and stuff like that. So these were not good things for the market to hear because the market was already hanging on the thread. And then Nvidia saved the market. Market rallied, thinking that everything was going to go up, and then all of a sudden, bam, this came, and then it caused the market to sell. So I see this to be anytime you see something like this, like we day traded this, those in the day trading service within our community, we day traded this. So initially we captured the first move, like the long here, we captured this long. And then this reversal here, that was something that we captured later in the day. And I traded the ES mini futures. I shorted the ES mini futures, and I also shorted the NASDAQ futures as well to the downside. So basically what we were looking for was that, based on SPY was showing more strength, relative strength compared to the QQQ. And what happened was, around, if you look at this time here, if you look at the time here, this is around 11. That's when that news broke. And then the market just sort of, boom, just sort of the entire day. And this wiped out $1 trillion from the stock market in just one day. And it wasn't even any big deal of a thing because, like, stocks are overvalued. That's something that even the Fed chair Powell has said it a number of times. So why would that cause the market to sell off down? But it tells you that there's lots of fear in the market. So any slight negative news, it causes the market to sell. So the market is overvalued. Those in our community always talk about valuation. So in 2026, what you have to look for is that you have to look for full year guidance. Most of these AI companies and AI trade that is going on, most of the companies they are overvalued. And what happens is that once we get into 2026 and they start reporting earnings, they have to justify that high valuation. So right now what is happening is that the market is weeding out all the excess excess fat and excess froth from the market, and then it's doing what I call the great reset. So it's resetting the market. I've been saying that the market is due for a 10% correction for some time now. I believe that right now, I will say that it is underway. It's on the way to that 10% correction. I think that by the end of next week, we could be at that 10% correction. And then once we get to, I'll show you the levels that I'm looking at. So let's go to the SPY. Let's get to the SPY here. So the SPY is the ETF that tracks the S&P 500, the top 500 companies in America. And currently, what's happening here is that in the last video that I posted on Tuesday, I talked about a head and shoulders formation. And finally, we got it. Head and shoulders formation. Initially, I used this, and now this has confirmed here to the downside. Okay. So when you have a head and shoulders pattern, as a technician, you can figure out what is called the measured move. Where is it going from here? So SPY today sold off and came to the 100 SMA on the daily, simple moving average, which is a break wall support. So tomorrow we are going to see if the market is able to hold this level or is it going to go down further. So let me check the futures market to see what's going on in the futures market right now. So currently, the futures market is slight green, but the Nasdaq is red, so it doesn't really mean much. So right now the Nasdaq is red, and then the ES is just up by 1 point, $1.50, which is not much. So it's basically, I'll call that to be flat. Okay, so let's look at the measured move. Where is SPY going next? Where is the general market going next? So if you put this, so this is the neckline. So here, this is the neckline, or what you can call an armpit to armpits, right? So you take the highest point of this head and shoulders pattern to the neckline or the base here, over here, neckline. And then what you do is that you take this from here to here, that's the distance, and you put it here. Look at this. Wow, you can't make this thing up, right? This is crazy, right? So if this continues, if there's more selling pressure starting tomorrow, then definitely we are going to get to this area. That's the 100 SMA, 200 SMA on the daily. And that coincides with what? The previous all-time highs. That is the place where the market broke out after the Liberation Day sell-off. It broke out from here. So it came back to where it came from, and it broke out from here. So this is going to look like what I call retrace to the scene of the crime. Okay, so let's check it out. Let's check the distance. So here from the all-time highs, right, to the yellow line, which is a 200 SMA, you are going to get approximately 11%. So anytime you get a decline of 10% or more, it is called a correction. 2% pullback, 2% is called a pullback, 5% is called a pullback. Anything lower than 10% is a pullback in the market. But this year, if we get that 10%, which is long overdue, then it's going to be called a correction. So anything from 10% to 19% can be considered a correction. 20% is a technical definition of a bear market. So the last time we got a bear market was here, earlier this year in April. So if you look at this from the peak to trough over here, 21%. So this is a classic definition of a bear market. Okay. So now that we know where price is going, as traders and investors, we need to be very vigilant and very careful in the way we take any kind of trade. So if you're a trader, then you can trade this for a short term. But if you're a long-term investor, you have to know where the market is going, where the market is earning, and it's going to be an opportunity to buy your favorite stocks, right? But I think that we are going to get more downside in the weeks to come, in the next week here. And tomorrow we have employment numbers coming out. So if those jobless claims come out and the numbers are not favorable, it could cause further decline in the market, right? It could cause further decline in the market. So we shall see how that plays out tomorrow and in the upcoming week towards the end of November. Also, let's look at the monthly chart. So on the monthly chart here, we can see that we've had how many months? 1, 2, 3, 4, 5, 6, 6 months, right? So once we go to the 7th month, what are we seeing here? We are getting that sell. Anytime you get this kind of sell here, it means that you can get, it looks like we can get more follow through to the downside, right? So I believe that from the look of things, we are going to get the first red month since April in the market. And that's going to be significant, right? That's going to be a big deal of a thing, right? For the market to close red, because the market has been running hot from April to now. And this is just a cooling off period. Okay. So here, let me look at this here. Let's go back to the chart here. So we have this to be, so this is the area where I believe that the market is coming. By the time it gets here, those that do not know that this is coming, they are going to get exhausted, they're going to get frustrated, they're going to sell a lot of stocks and stuff like that. That is going to create a buying opportunity. And I believe that we are going to get one last rally. And that one last rally could even take the market up to new all-time highs, and we are going to get a blow off top, right? We shall see how that plays out. But for now, the 10% correction is underway. And currently, where are we now? We are from here, from peak to trough is how many? Let's see. 5%, approximately 5.5 or 5.6, but let's run it off to 6%, right? Approximately 6%. So we have 4 to 5% more to go in the market sell-off. Okay, so now that we've checked the VIX, let's check this SPY. Let's look at the volatility index. In my last video, I talked about a potential breakout in the volatility index. And there we are. We have it now, right? We got that breakout of this trend line. And I said that when we break this trend line, we are going to get a squeeze to the upside. So right now, the VIX is at where I call a supply zone. If it's able to blast through this supply zone, it's going to squeeze up and it's going to cause massive extreme pain in the market, right? We are going to get that kind of aggressive selling. And I believe that aggressive selling is going to happen potentially next week and finish it off and get to the 200. And then once we get into November, we can start getting the reset for the rally to the upside. So if you're an investor, what you need to do is that you need to review your portfolio, look at the stocks that are profitable companies, right? Companies that are profitable, those ones are going to do well in 2026. If you are holding a whole bunch of unprofitable companies, next year, most of those companies are going to struggle. And as the US economy gets into a recession next year, there's going to be a decline in the market and we are going to go into a full-blown bear market, right? So right now, we are still in the bull market. This is not the end of the road yet. I believe that we are going to get one last rally. After the correction, we are going to get one last rally, okay? So I'm going to be watching this closely tomorrow. If we crack above this yellow box, the highs of this yellow box here, we are going to get a big rally, a big sell-off in the market, okay? So next, let's look at the QQQ. That's the ETF that tracks the NASDAQ, right? So the QQQ is actually weaker than the SPY because it's actually trading below the 100 SMA. So you see this line? This white line is 100 SMA and it's trading below it right now. So currently it is trading below it. And I believe that this sell-off might continue, is going to continue in the days ahead here, or we can get a dead cat bounce, and then from there it's going to go up. Okay, it's going to go down. So here, what is the measured move? So here we have this. This is our neckline. Somewhere here is our neckline for this. So again, this is also putting in a head and shoulders. I talked about this in the last stream, last video. So now it has confirmed. It's not confirmed yet. It formed head and shoulders. We need a break below the 100 SMA for it to confirm. Okay. So what is going to be the measured move? So the measured move is going to be the highs of this to this area, somewhere here. Okay. So let's just make it conservative, somewhere here, right? Somewhere. So from here to here, Boom, what do we get? The 200 SMA. So look at how this is marching. It's just, you can't make this up, right? You look at how it's marching to perfection. So the next target, the bigger picture target for the QQQ is the 100 SMA on the daily, right? Obviously, we are going to get bounces from, between now and then, but eventually we are going to come to the 200 SMA. So here, this is another level. This could act as support level here as well. So these are areas where if price is coming down, it could act as support and get quick bounces there. But this here is showing us that we are in a downtrend and we still have more downside to go. Okay. All right. Okay. So when you look at this, when you look at the volume profile, volume as a function of price, you are going to see that QQQ is entering into what I call the valley of death, right over here. You see here, you see this volume void here, volume gap is going to come down here and fill this gap. Then after it gets here, it's going to move down and come here as well to fill that gap there. So we shall see how that plays out. So this is the 200. So I expect that price is going to come all the way here and then possibly fill this gap, these two gaps to the downside. So fill this one first, then it comes here. So based on price action, based on technical analysis, that is where price is going, unless we get a bounce, right? Unless we get a bounce, like a bounce that whereby you get a green candle like this, let's say a green candle, wiping out this red candle. It can take a couple of days, but as long as you don't get price to move and wipe out this candle, it could be a couple of days of green. Combine them. If it wipes out this, then we are going to get a reversal. Otherwise, we are heading down. And this here is called a clearing bearish engulfing candle. It's a type of candle that clears 1, 2, 3, 4, 5, right? Actions, even 6. This typically gives you a 90% follow through rate, right? Anytime you get this in trading, it could be day trading, using day trading, it could be swing trading, the same principles apply. So based on that, I think that we have more downside here in the market, and that 200 SMA is a place where price can get to in the coming days and in the coming weeks. Okay. All right. So now let's look at the grandmaster of the market, which is Nvda. So Nvda as well is also putting what? A head and shoulders pattern. Look at Nvda head and shoulders pattern again. So now Nvda must hold this 100 SMA. So follow the theme, follow what's going on. Nvda is at 100 SMA, SPY is at 100 SMA, the QQQ is at 100 SMA, right? So if Nvda continues to sell, QQQ SPY will continue to sell. Okay, so where else do I see Nvda going? Nvda is going to come here, over here, somewhere here. You see where it's going to coincide with the stock market, like the SPY and QQQ. So this is a trade idea. Immediately Nvda breaks below here is a place where you can look to get you can look to short the market, short QQQ, short SPY, short Nvda, and we are going to get this to come all the way here. So this is just a trade advice. It's not trade idea. It's not financial advice, right? This is because Nvda controls the market, and anytime Nvda is selling, the whole market sells. You saw it yesterday when Nvda rallied post earnings. It lifted the entire market. It lifted the entire AI trade. Now Nvda is selling again. We shall see what happens. So here, this line here is going to be the line in the sun tomorrow. If tomorrow the bears get their way, we are going to get a candle, a red candle to the downside somewhere here. If the bears get their way, you are going to see a red candle. It could be of any size. It could be long, it could be short, whatever it is. You are going to get a red candle here to the downside. Okay, so now that we've established that this is forming a head and shoulders, how do you get the measured move? So the measured move is going to be from here, the highest point, to the neckline or the armpit. So you take this, put it here, Boom, same thing. This is crazy, right? Same thing, right? So if the bulls are unable to defend this 179 level, Nvidia will hand down. Not in one day, it's going to take a couple days, right? Or maybe even 1 or 2 weeks for it to do that. And we are going to head down to this area. So here. So before then, obviously, there are other support levels that this can come to. It's not just going to do that in one day, right? It's going to do that over a couple of days because there are a lot of levels that this has to meet. But this is a clearing bearish engulfing candle, which clears more than 5 candles. Anytime you get this kind of candle, you have a 90% follow through rate, right? That means that it's not 100%. 90% does not mean it's 100%. Means that there's a 10% chance that it might not work out. But something that is 90% probability, you have, if it occurs 9 times out of 10, it's going to work out. So we are going to watch to see that tomorrow. So tomorrow, I expect to see a red candle to the downside if the 79 level breaks. Okay. All right. So next one is let's look at the DIA. The DIA. So this DIA is the Dow Jones Index, Dow Jones Industrial. So that's where we have the top 30 companies, like legacy companies in America, right? So these are blue chip companies that have very profitable, right? So as we get into 2026, and if we get into a bear market due to a recession in the US, you are going to see a sharp decline in the Nasdaq because the Nasdaq has a lot of tech stocks which are not profitable. If you take out the Magnificent Seven, most of the stocks in the Nasdaq, most of them are not profitable, right? They have plans to make money in the future, they are not profitable. So you are going to see that we are going to get a sharp decline in the Nasdaq, followed by the S&P, and then DIA is going to be the best performing index, right? That happened in 2022 in the bear market. That's going to happen again if we get a US recession and we get a bear market again, because people are going to go into the Dow stocks, whereby you are going to go to places like Walmart, get a stock like Walmart. They reported today. So in times of hardship, in times of recession, folks have to eat, people have to do groceries, do stuff. So they don't have a choice. They have to go to places like Walmart, right? And Walmart business is going to boom during that time. So you're going to see that stocks listed in the Dow are going to do well, right, during that time. But all these AI stocks, all these high flying AI stocks, most of them are going to get demolished in the bear market once the bear market hits next year. So make sure the take-home message today is that make sure you analyze your portfolio, look at the stocks that you are holding. If they have ridiculously high price to earnings ratio, PE ratio of more than 30, and also if those ones are not profitable, you have to start advising yourself, because once the decline comes, those ones are going to be the ones to go first, are going to be attacked first. So look at what is happening in the crypto market. Bitcoin is a risk asset. Anytime there's fear in the market and there's high risk, everybody's running, running for safety. What do they do first? They sell their highest risk asset. That's why you see Bitcoin selling first and selling rapidly and significantly, right? That is why it's happening. So the same thing will happen in the stock market. So go check all the high flying stocks that were rolling, things like Oklo. It hasn't made any revenue. It's a loss-making company. And the stock was trading at 100 and something dollars. Where is Oklo today? If you go check Oklo, you are going to see Oklo. Look at it. Massive decline, right? Oklo went all the way to 194. It had no business going to 194, but look at where it is right now. So Oklo is going to continue selling to come somewhere here. And then we figure out what he's going to do next. Maybe here even 58, right? Okay, so let's go back to the DIA. So the DIA is very robust. And I believe that although the S&P and the Nasdaq will get the 10% correction, the DIA will not get a 10% correction. It's going to get something more like a pullback. So let's investigate that. So from here, from the highs to over here. This is why I think is going to bounce. It's going to be around 7%, right? Not quite 10%. Okay. So the DIA was declining. So actually in our swing trading service, so if you want to sign up for our swing trading service, check out the link in the video to sign up. So here, our swing trade of the week was DIA puts, right? We got the 470 puts expiring end of the month, and then we cut the move to the downside. So this give us like 100% return on investment. Why did we take that trade? Because here we had this is a top and tail candle. So if you have this is a weekly time frame, by the way. So if you get a big move like this and you get to a top and tail candle, it's a sign of a reversal is coming. So the trade idea was that, okay, this was going to be our stop loss. The highs of this all-time high is going to be our stop loss. And then here is going to be the reason why we're taking the trade. If this gets wiped out, then we exit the trade. So this worked out really nicely. Members took profit, everybody took profit, 100% return in just a couple of days, right? So this was a fantastic trade. So again, with DIA, I believe that DIA is going to come here at this point here. That's where I believe that is going to bounce and reverse, when by that time SPY and QQQ would have got into the 200 SMA level. So here, this is going to be on the daily. This is going to bring us to just a little bit below the 100 SMA, and then from there is going to reverse to the upside. So this, we are going to be watching this, and you are going to see what's going to happen. But you're going to see that this index is going to be very resilient compared to the Nasdaq and the S&P 500. Okay, so now that we know this, let's look at a couple stocks that I'm watching for tomorrow and the days ahead. AMD. So AMD is a semiconductor company in the semiconductor space. So if Nvda is selling, so AMD is like the cousin of Nvda, right? If Nvda is selling, you are going to get a sell-off in AMD. So AMD, I believe that by the time the correction is done in the SPY and QQQ, AMD will be back at 170 or even lower. AMD will be back at 170 or even lower. So tomorrow, this is a high probability short. Tomorrow, if price opens below here, you're going to look to short it to this area. So this is going to be a first profit target. This place, this is the highs of this day, August 13th, and then the 100 SMA. So this area here is a place where price can bounce. Then from there, it's going to go down and fill this gap. Then once it fills the gap, it will figure out the next steps of where it's going. So this could act as a very good support level. If it fails, then it's going to come all the way down here to the 200. So one stock that I'm watching tomorrow is AMD. So yeah, so that's about it for tonight's video. I hope you learned something. I hope you find this insightful. Please put your comments in the chat, like the video, and most importantly, share this video with your friends and family who are in the market. So so that you can learn, right? Technical analysis puts the probability 80% in our favor. So our trading rate, we focus on the data. We focus on the charts. We don't do hype. We don't do like crazy sentiment, going to the moon. No, those kind of thing. No, we look at the charts and we let the charts guide us and provide us with the information that we need to make the right call. It's not always 100% correct. Like nobody has 100% win rate, but with technical analysis, it can put the probabilities in our favor, and it helps us to win 80% of the time. And 20% of the time, it might not work, but that's fine. That's why we have risk management, right? As well. So yeah, so thank you for watching. Thank you for supporting the channel. See you in the next video. Have a good night. Bye for now.